If you keep telling yourself why, the price must go up or down, this video will change how you trade. We see it all the time. A sharp, sudden candle appears on the chart. What's the first thing your mind does? Does it start building a story? Ah, this is it. The big money is stepping in. This has to be the bottom. You feel a sense of certainty, a feeling that you've just unlocked a secret the market was trying to tell you. Let's follow a trader. Let's call him Alex. He's sitting at his desk, watching the charts, just like you. A sudden, aggressive green candle print. Instantly, his mind lights up. He thinks this is a clear rejection. The buyers are in full control now. He feels that he understands the market's intention. He feels smart. So what does he do next? He starts looking for evidence to support his story. He opens a news website. Ooh, look, a positive economic report just came out. That explains it. Then he scrolls through social media. A popular analyst he follows just posted a bullish chart. See? I knew it. Everyone is seeing the same thing. He even looks back at a similar price move from 3 weeks ago and connects it to today, reinforcing his belief. He's not just analyzing the market anymore. He's writing a novel. And he's the hero who figured out the plot. Fueled by this conviction, he goes back to his chart. He draws a horizontal line, a support level. But notice what he does. He only marks levels that support his bullish idea. He's preparing for one outcome, and one outcome only. The price going up. He ignores the resistance levels just above. He dismisses the bearish divergence forming on his indicators. In his mind, those are just noise. Invalidation. The thought barely crosses his mind. Why would he need an exit plan for being wrong when he feels so right? He's now emotionally attached to this single scenario. It's no longer about probabilities. It's personal. His idea has become a part of him. He's not just trading a setup. He's defending his worldview. He stares at the screen, waiting for the price to prove him right, to validate his story. He feels a sense of control, a sense of order in the chaos of the market. The story makes him feel safe. But then, the market does what it often does. It does the opposite. The price hesitates, stalls, and then begins to fall, slicing right through his support level. His emotional reaction is immediate. Frustration, anger. How can this be? It doesn't make any sense. The setup was perfect. He might even feel betrayed by the market, as if it personally targeted him. He writes in his journal, but he's not analyzing what went wrong. He's writing about how the market was irrational, how it should have gone up. He's reinforcing his narrative, even in the face of loss. Does any of this feel familiar? If it does, you're not alone. This is a fundamental feature of the human brain. Our brains are story-making machines. For thousands of years, creating narratives helped us make sense of a complex and dangerous world. A rustle in the bushes wasn't just a random sound. It was a story about a potential predator. Stories help us simplify complexity and reduce the feeling of uncertainty. When we face the endless, random-looking data of the financial markets, our brain instinctively does what it knows best. It creates a story to feel safe and in control. The problem is, this deeply ingrained survival mechanism works against us in trading. Why? Because the market isn't a story with a beginning, middle, and end. It's a continuous flow of probabilities. When you create a single, compelling narrative, you blind yourself to all other possibilities. You become rigid. You stop thinking in terms of what if and start thinking in terms of it must. This is the opposite of the probabilistic mindset required for long-term success. Your story makes you feel certain, but that certainty is an illusion. It prevents you from seeing the market as it is and forces you to see it as you wish it to be. So, how do professional traders escape this trap? How do they think differently? First, they replace predictions with scenarios. A professional trader looks at that same sudden candle and doesn't see a guarantee. Instead, they think, okay, this bullish momentum is one possible scenario. What's another? The price could be moving up to test that resistance level and then reverse. That's a second scenario. Or this could be a fake out before a stronger move down. That's a third. They don't try to predict which one will happen. They prepare to react to whichever one unfolds. Second, they replace hope with invalidation. For every single scenario they map out, the most important level on their chart is the invalidation point. Before they even think about profit, they define the exact price where their idea is proven wrong. For the bullish scenario, they'll say, if the price breaks below this low, my bullish idea is invalid, and I'm out. No questions, no hope. Invalidation is their shield against emotional attachment and wishful thinking. It's their predefined escape route, planned when they are calm and rational, not in the heat of the moment. Third, they think in distributions, not single outcomes. They understand that over a series of trades, anything can happen on any single trade. They could be right for all the wrong reasons, or wrong for all the right ones. Their focus isn't on being right on this one trade. It's on executing a strategy that has a positive expectancy over hundreds of trades. They know some stories will end well, and some will end badly. By thinking in terms of a distribution of outcomes, they detach their ego from any individual result. A loss is not a personal failure. It's simply an expected part of the distribution. It's a data point, not a judgment on their intelligence. The emotional certainty that comes from a good story feels wonderful. It feels like you have an edge. But in the world of trading, that feeling is a danger signal. It's a siren's call leading you toward the rocks of emotional decision-making. Professional trading isn't about feeling good. It's about thinking clearly and managing risk effectively. It is about being humble enough to accept that you don't know what will happen next. The journey from a storyteller to a probabilistic thinker is the single most important transition a trader can make. It's the shift from seeking comfort to seeking consistency. It involves letting go of the need to be right and embracing the process of preparing for everything. Remember this. The market does not reward stories. It rewards preparation for multiple outcomes. Follow Mindful Trader Lab. If you want to build professional market thinking,